Carter Malloy, CEO and founder of AcreTrader. What a pleasure it is to have you on the show. And like I told you in our pre-podcast chit-chat, what I would like to hear from you out of the gate is your elevator pitch for any new prospect that you might come across who you know is an investor in real estate, an accredited investor, you know they invest. Why should they invest in agriculture?
Great question. One we talk about all day, every day. That's right. Agriculture or farmland is real estate. So we are real estate investors. We do it through our website at acretradr.com, and it's a very simple investing platform. You named it for accredited investors currently. And we allow you to invest in farmland. Why would you want to invest in farmland is the next question we get. That sounds incredibly boring, and it is. And that's great. You know, boring assets can often be very good ones, and farmland is certainly one of those, where over the last 30 years or so, it's compounded almost a 12% IRR for its investors. It's done that without leverage, so without debt and without the volatility you see, the big positive and negative swings you see in commercial real estate returns, for example. Farmland has not experienced those. So it's a slow and steady compounder, and that's what we're after, is investing for portfolio diversification and risk-adjusted returns. And that's why we're excited about farmland.
Fine. So you've said a couple of things here, and just so you know, I do just make sure you know I'm typing here. I'm not sending emails or texts or anything. I'm just taking notes, basically, what we're talking about. So you said two things there, very, very important. Number one, without debt. That's a big wow, because as we all know, debt is the killer, right? It's the killer. It doesn't matter what happens. If there's a downturn and you've got debt, there's a potential you could lose your asset to somebody else higher up or lower down in the capital stack, right? Higher in the priorities. But there has to be a downside to farmland and to investing in farmland. So tell me, what are the downsides, right? I want to know, what are the downsides?
Yeah, there's downsides to everything, and there's no risk-free returns certainly out there. But as a whole, the downsides for us really there's macro and there's micro, right? So when we think about macro risks to investing in farmland, commodity cycles can be tough. We've been in one for 5 years now of low commodity prices. That doesn't help us as farmland investors, and we've seen that with farmland values. We're not talking about returns, because you also get a rent from the farmer, but the values themselves have slowed down in their appreciation over the last 5 years as commodity prices have slowed. Interest rates are impactful as well, and productivity. So does that land grow more and more food every year? Can technology continue to help expand the value of that land? And the good news is both interest rates and productivity have continued to be macro drivers, while commodity prices have not. Then there's micro drivers, and that's where the real risks lie. And that's where we really spend our time and thinking is diligence, making sure you underwrite the right farms and not the wrong ones. Farmland is an incredibly idiosyncratic asset class, in that one parcel right next to a great one may be total garbage. And so we've got a world-class team of farmland underwriters and a farm valuation team that goes out and looks for farmland. We talk to farmers and farm sellers every single day, and a lot of those to boot. And that's the biggest, I would say, focal point of our company is due diligence, is going out and really, really aggressively underwriting every parcel that we bring to the website. And to that, we maybe list 1 in 100 farms we look at. And that's a big maybe. It's something much less than that in reality.